Welcome back to Open Exchange. Every Wednesday we talk personal finance at this time. We're going to talk Investing 101. I mean, you could do 101 shows on how to invest, but we'll give it a go today. We'll kick off the process. In the studio in Johannesburg is Warren Ingram, financial planner at Galileo Capital, and he's joined by Adele Hatting, who's a market development analyst in the JSE's equity market division. Adele, I'll start with you. When I first started in financial services, I was a so-called trader in a galaxy far, far away, and my boss sat me down and said, Lindsay, come in, buy low, sell high, and then go down the pub, which was very good advice. But buying low and selling high is, of course, the basis of any investment philosophy, but not quite as simple as that.
No, Lindsay, absolutely. I think many people find the JSE to be extremely complex, intimidating, and actually very scary. And I think there's also this perception that you need a lot of money to invest on the exchange. But that needn't be the case. An investment vehicle such as an exchange-traded fund, or an ETF as we call them, offers that solution. It takes the anxiety out of picking an individual stock. You can invest small amounts like 300 Rand a month or even 1,000 Rand once off through an investment plan and ultimately save for your future.
Adele, you just gave a really good advertisement for the JSE, and of course when you have any investment you've got to have a good platform through which to invest, and the JSE is that, of course. Warren, but on the other hand, you've got to choose the right instrument, no matter how good the platform is, the right instrument and the right broker and the right advisor. How do you go about choosing? It's such a minefield out there.
I think it depends on really what you're looking for. So the type of person that you are as an individual will dictate what sort of service provider you want to use. So a lot of people are, I guess, do-it-yourself investors, you know, the pilots of their own destiny. And for people like that, you know, choosing a stockbroker probably will be their best route because they will want to make their own investment decisions. And I think just to focus on that point, I mean, to me nowadays with choosing a good stockbroker, it's a lot more about price than anything else. You know, the research is reasonably commoditized. The ability to trade is definitely commoditized. So it comes down to, you know, the information flow that they provide you. But even that, the media outlets are so good at giving you information. I mean, this show is a case in point. But so it comes down to how much they're going to charge you to trade. So to me, that's really what I'd focus on if I was choosing a stockbroker. And then for the other options, I guess you know, if you're one of those people that doesn't feel comfortable making your own investment decisions, then it comes down to choosing objective advisor, somebody who will give you good advice that suits you rather than what's good for the advisor's back pocket. And that comes down to the way they get paid and their qualifications, I guess.
Warren, I'm just going to stay with you for a second because you brought up the media and the amount of information there is out there, and I have to say against the media, so therefore against myself, is that the media loves a good sensation. The media loves the fact that there could potentially be a geopolitical skirmish because it means that the markets are active, there's lots to talk about, and people tend to gravitate towards bad news. But you've got to sift through all that, haven't you? And you've got to get the right information.
Well, I think that's the point. I mean, focusing on information rather than news is a big deal. And I think, I mean, just to talk about right now, I mean, on your previous show, you were focusing on Syria as one of the topics of the day. It's having a huge impact on the rand, and I mean, you know, to me, it's a dramatic and terrible event in a small country with a tiny economy that will have almost no impact on the world in the long term, other than as a human rights issue. And I mean, that's what it is. It's a human rights issue. It's not a stock market event. The fact that it's impacting the rand and causing currencies to fluctuate just shows you it's about the media. The media enjoy this story. It's something that they can talk about in possibly in a quiet time, but for an investor, I mean, it's nearly meaningless. It's maybe an opportunity to buy investments at a good price.
Adele, over to you now. Of course, the JSE disseminates information. It disseminates all the buy and sell orders and spews out a price on a second-by-second basis. But you also provide other services for investors. And again, that's the sort of information that people need in order to hold their hand through their first investment steps, I suppose.
Absolutely, Lindsay. I think information is key, like Warren mentioned. And we offer seminars at the JSE as a start, power hours and showcases. We have a list on our website which people can visit, and you get a chance to engage with financial experts and learn about the market, learn about the basics of investing. And obviously our website as well has a great deal of information which you can access and learn a lot more about making those first steps in planning your financial future.
What would you say to somebody who has not ever invested in the stock market and wanted to start right now? I mean, very, very basic stuff, because when people get too clever, they tend to get too complicated. But I always think you've got to go back to your roots, and that stupid example I gave in the beginning, buy low, sell high, and get out, is probably the right thing to start with. But anything else you would say to them?
Empowering yourself through reading. Do as much research as you can. There is a range of information out there on the internet, financial newspapers, financial magazines, and obviously a range of financial experts like Warren here today, who can offer you that information that you require to make that investment decision.
Warren, you've got a punt there, but you've got to justify that punt by giving us your own tips. Good, solid, sound, simple advice from Adel. What would you say?
I mean, I agree with that. I think, also just understand your time horizon when you're making investment decisions. So if you're buying shares and you're a novice investor, you need to give yourself anywhere between 5 to 10 years as an investment horizon to buy shares. If you're looking to save money for the next year or two because you want to buy a car, put down a deposit on a house, or pay the kids' school fees, then shares really aren't the place for you right now. But if you're saying, look, this is an asset I want to build, and I want to get as much capital growth as I possibly can, but over an extended period of time, I think shares are a great place to go. And definitely, the more information you have at your fingertips, the better. And I mean, as we just discussed, to me, information means reading books. Follow the great investment gurus out there, the Warren Buffetts and the Peter Lynch's of the world. Try and understand how they make their investment decisions, and then you can start to do that. If you're not prepared to do that homework and you're not prepared to put in the time to do the research, then Adel's point about choosing exchange traded funds to me is a great one. There are very few people that are cleverer than the market over long periods of time. Although the entire stockbroking industry will tell you that's what they do. But I would say I think buying the index is one of the best things you possibly can do with a solid chunk of your money.
I know stockbrokers that have been in the business for 25 years, and they know less today than they did when they first started. Just very finally, and staying with you, Warren, if I can. Also shares, if you're in the share market, shares have different personalities. I mean, one day, a couple of weeks ago, I think it was Harmony went up 22% in one day. That's not for widows and orphans. You've got to have a certain personality to suit the shares personality. So you might want to go for British American Tobacco if you want a good dividend payer and a slow capital increase. And if you want something a bit more glamorous, then go for something volatile.
Sure. I mean, I think what's interesting about something like British American Tobacco right now is it's had an incredible share price appreciation over the last 18 months. For a large blue chip that, as you described it, should be plodding along, giving you a good dividend, generating slow capital growth, and all of a sudden it's absolutely gone, insane, I think, in terms of valuations. And that's the point, is I think you've got to be, firstly, very careful in terms of making your investment decisions. If you're going to buy, resources stocks, the gold mines in particular, you need to appreciate that you really need to know what you're doing. You can't just buy the gold story or listen to someone like me sitting on TV today saying, I think it's a good price, and you go off and buy it, because, my job might be to sell gold companies today. So I mean, you're right. I think rather buy large, diversified blue chip companies in the beginning, blue chip, in other words, very large businesses, than buying small companies or companies that have a very narrow focus, because those typically are going to be volatile and are going to give you a heck of a ride.
Warren, good advice. Thanks very much for your time this morning. Warren Ingram is a financial planner from Galileo Capital. Adel, thanks very much for your time as well. That's Adel Hatting, Market Development Analyst in the JSE's Equity Market Division. We're going to